Certain times, sound financial advice is very important.
We are lucky because every Thursday we're joined live by Steve Peasley. He's a registered investment advisor and the president of KPP Financial in Dana Point. Welcome, Steve. Well, something new to worry about.
First of all, I don't know how lucky you are. I'm not sure about that.
That's how we're billing you. Don't undercut yourself. But something new to worry about this week in a slow economy. Our safest investments, our money in the bank. Indymac fails, so should we go under the pillow?
No. Our banking system is very solid. Never in the 75 history of the FDIC has it ever not paid the insurance limit. So you don't have to worry about that. As long as you don't have over $100,000 in any one account or you can't have like two accounts with your individual name, 100,000 each.
At the same institution, you won't get it. So let's look at the rules because there's other rules. For instance, if it's a retirement account, you might have coverage, I think, up to
$250,000.
$250,000. Now, how about the folks? And some would say, I don't worry about people that are this affluent. But if they had $500,000, and a lot of folks did, they have to negotiate? How does that work?
Actually, the FDIC has paid more than $100,000. People don't realize that they actually have paid more than $100,000.
They don't get stiffed. They certainly don't get stiffed completely.
No, because if the bank has assets, which they do, then people will get some more money. But that won't be for a long time. You get your first $100,000 right away. People are getting it right now.
And then they have to sell off the homes that Indymac foreclosed on, stuff like that.
Exactly. Now, I will warn that if you're in a credit union, they don't have FDIC insurance, but they have the what's called the National Credit Union Administration, which has the same insurance. $100,000, and it's also federally insured. So even if you're in a credit union, I'm worried about people in credit unions think, "Oh, am I insured FDIC?" And it's not, but it has its own. And you have full protection.
There were a lot of people standing in line. We saw the coverage, heard about it, pulling their money and trying to get it into larger banks like Bank of America and Wells Fargo. Is that the right thing to do? And what is it going to do to these smaller banks?
Well, I won't say it's the right thing to do. If you're really nervous, you're uncomfortable, go ahead and do it. Your money is protected. It's not going to go anywhere for that $100,000. So, I'm a little worried that, people are panicking when they don't need to. They really don't need to. If you had $30,000 in a CD or a $50,000 CD, you don't even have to think about it. It's fine. Okay, it's those people that have more than $100,000. And it's already too late. So, if you had $150,000, that $50,000 is not going to come to you very soon, if at all.
Right.
So, and the $100,000 is totally protected. So you don't have to worry about that so much. Now, if you have a trust, it's even, and different owners of the trust have more than $100,000. Each owner of that trust. So you can have a trust account of $500,000. If there's 5 owners or 5 not trustees but beneficiaries, you can have $100,000 each, and it's all insured.
Okay, what do you take away though from that? It still would be a hassle if one had to go down and get their money, or say if you were an investor in the stocks. I mean, Indymac was a stock like a lot of these banks that went from 50 to pennies.
Right.
What do you take away from the Indymac failure? Will there be others?
There likely will be others. There's an estimate of about, and I know this is going to scare people, about 100 to 200 banks nationwide will probably fail in this cycle. That is
the smaller regional banks like
the larger banks will probably not fail, but the smaller, like an Indymac or smaller, probably will. And there's 2 or 3 or 4 in California that are on a watch list. I don't want to give out the names because I don't want to cause any problems, but they're all FDIC insured. But if you have a bank that really is concentrated on subprime loans, might be a good idea to move that money to a bank.
Yeah, the key word, subprime, Alt-A, not the ones you want. Steve Peasley, thank you very much, as always, every Thursday. President of KPP Financial out of Dana Point. Check out his website. It's InvestTalk.com. He'll be back next Thursday. And if you ever have a question for Steve, email it to us, news@kdoc.tv.